What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the daily semiconductor bull 3 times shares ETF, ticker symbol SOXL. This was the viewer's request, and thank you for your donation. This video is for entertainment purposes only. Please trade at your own risk. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So what has happened? Well, this ETF bottomed back here in October of 2022, had a nice run up all the way up until 56 or even the $57 level. 56.99 is the highest point, so that's the highest 52-week range, 56.99. And then price was just overextended. You see that it was moving nicely at this sustainable angle of attack the bulls were making, month after month. Then all of a sudden we saw this huge burst up, which can mark the end of a trend. So basically the trend did end, the bull trend is over. We can definitely start a new one in the future, but this one is definitely over just because of the overshoot, and we saw a massive breakdown of it on the bottom side. So we saw basically a pop-up, a blow off top, a large move down, bounced off the channel support. Price tried to continue higher, but this was all just consolidation or a bear flag for another similar size drop in the future. So this was all one leg right here. Price consolidated for a second drop, and then that's exactly where price went at the $32 level. We a little overshot it, and that's sometimes that can occur depending how strong the bearish move is. And it looks like it's coming back down to the $22 level. So $28.22, that is a key level. Why is it a key level? Because price likes to test it several times. It was support here, back here in 2021. It was support here in 2022. Then it turned into resistance in April of 2022. Turned into resistance. It was still resistance in July of 2023. Price broke above it, found support. So again, it was tested several times on both sides, the bulls and the bears. So it looks like the bears are coming back down to test that level once again. So the 28.22 is a good level to get a bounce off of. Maybe it will be the bottom. We'll have to wait and see. It needs to break these two trend lines. The first one is this more aggressive one right here off of the candle bodies, and the second one is this one right here that's a little bit shallower. So again, for me to have a sustainable bull trend, you got to break these downward trend lines. So again, a bounce off of this level can break the first trend line, but maybe not the shallower one, and that could lead to more downside. So let me just show you guys what I mean. We can definitely get a bounce off of this level right here, move up higher, struggle to push up, and then continue to trend down lower. So price would need to break this downward trend line right here if it has any chance of a sustainable bull market. So me personally, if I was a long-term holder or some type of long-term trade, and I really believed in this, I would personally put in a little bit here at this level at the 28.22, expecting a bounce, and maybe it'll break through this trend line. But again, you can't be sure because we're still below this trend line right here. But again, if it continues to trend down lower, I would average a little bit more in. Probably at the next level would be this trend line right here. So you see that there's this upward trend line off of the swing lows. So let me show you that right now. So we have this trend line right here. Off of this swing, connects perfectly with the third touch, fourth touch. Price did break below it, but got it back above it, which is a good sign. And this trend line is right around the $25 level. So mid-20s. So the high to mid-20s is probably where price is going to be seeing a bounce off of here, somewhere right here. And it may or may not lead to an uptrend. Probably not, because there's a good chance it can get rejected from this trend line and continue lower. Now, if it breaks the trend line and then we see a pullback that stays above support, that will probably lead to much more higher prices. So this is a good area right here on the chart, right around the $28 to $25 level. Now, let's say we break both of those levels and the trend line. Well, then I would be waiting for this level right here at the $14 level, because that's where this strong bottom was formed right here in October of 2023. And if all else fails, the lowest point that I've seen on the chart dating back to basically 2017 is right around the sub $5 level, right around the $6 level. So that would be the heaviest place to go in at, me personally. So because this was the bottom in 2018, this was the bottom in 2020, this was the bottom in 2022. It could be the bottom in 2024. So it looks like there's kind of a 2-year cycle in play. You can see that in late 2018 price bottom, and then it made a top, and then came back down in April of 2020. So about 2 years, a little less. And then once price bottom in April 2020, it went up, and then came back down in October of 2022. So a little bit more than 2 years for a full cycle. So we've bottomed in October 2022, went up, February 2024 topped, and it could be good. There's a very good chance that this year is going to be another bottom. No one knows exactly where it'll stop, but there's a good chance it'll bottom this year and then lead to another rally up, probably up until 2025, and then probably 2026 we'll see another low take place. But as right now, what is the chart telling me? It was overextended. It was overshot the channel, leading to a correction towards the downside. Is moving pretty aggressively. So again, I'll be looking for the high 20s, mid 20s for a bounce. We'll see if that bounce can lead to higher prices. It would need to break these trend lines. If it does succeed, I want to see price find support and then continue higher. If it fails off the trend line or even just breaks it slightly and then fails, then I would be looking for the $14 level, and then the next level I'll be looking for is a 630. If it gets any lower than that, then that's a very bad sign, but I'm not expecting that to occur. Let's take a look at the weekly chart. And again, it's no coincidence that price was overextended. You can see how price was far away from this blue line, which is a 21 bar exponential moving average. Price eventually comes back to it. Even in the past bull market, you see that price was overextended, eventually came to the blue line. Right over here, price was overextended, eventually came to the blue line. Price was overextended, eventually came to the blue line. Works in reverse too. Whenever the shorts get overextended, price will snap back to it. It acts like a rubber band. So we're seeing aggressive selling. I'm looking for the high 20s to the mid 20s first. And if that doesn't act as support, I'm looking for the low teens. So probably the $13, $14 level, and then the $6 level. This may be the year where we don't see price get that low. We do have this trend line in play. You could adjust it a little bit shallower. So again, we might stop at the low 20s too. So again, that I'm not expecting. I would say, if I was assign probabilities to these levels, I would say high 20s, mid 20s is a very high probability. To get to the 14, it's probably like, I would say a 10%, and then maybe it's to the 630, probably even a lower percentage, probably like 5%. So very low probabilities to get to these price levels, but it's a very good chance we're going to be somewhere in the 20s, most likely the mid to high 20s in the coming weeks. And we'll see if price can bounce out of there. If it bounces out of there, we're probably going to make a new all-time high in the future. It'll probably surpass this high right here at the 57, and it'll probably pass the $73 level. You see that we did see two legs up. This is one leg up right here. Second leg up, target was met. So let me show you guys that right now. So all market generally moves in twos. So you see that it moves in impulses. This was the first impulse up right here. This was the biggest drop after the impulse, which can start the second one if price does continue higher. Target was met and exceeded by a large amount. You can see that second leg was much larger than the first leg, which is fine. Now we're just seeing a correction. When this correction is over, we could start another leg up higher. So all of this would be one leg now. The two legs would be one leg. And whatever we stop from can start the second leg. So it could be a little bit lower at the $20 level, which would make sense because that would take price right up towards the all-time highs at 71. So again, looking for I would say the high 20s is a very good probability, mid 20s, and then the low 20s. And then there's a good chance we could see a bounce out of there. But I'm watching for this trend line break right here. Once price breaks this trend line, there's a very high probability that it's going to continue to trend up higher and higher. So that's all I have for XSOXL on the daily and weekly charts. And this is Vee Trades, and thank you for your time.